What's going on, everyone? I hope everyone's having a good start to the week. For those of you that are just tuning in for the first time here, my name is Sean, and I'm one of the co-founders of Predicting Alpha. And here on our YouTube channel, every day we like to come on for a 30-minute session to break down what we're seeing in the market, share a couple trade ideas, and show how we can build some confidence in our ideas by applying data to what we're seeing in the markets. So what's going on, Ernie? Good to see you here, man. I have a really cool idea for you guys today that I'm going to be breaking down. Main stock that we're going to be focusing on for today is BIDU. So I've seen a pretty cool opportunity come up in BIDU, mainly due to the electronic vehicle space that they're entering, right? So recently, if we look up BIDU EV on Google, we see all this news in the last, 3 weeks or so about BIDU entering the EV space, right? Now, for those of you that don't know, BIDU is basically the Google of China, right? They have the biggest search engine. They're, huge buying platform, large amount of users on this platform. And, if you were to think about them, you can, if you're not familiar with them, maybe you're familiar with Alibaba. They're sort of a company like that. But they've made this new move into the electronic vehicle space. And when they made this move, the view of the company changed drastically. All of a sudden, people were comparing it not to Alibaba, but to Tesla or to Nikola or NIO. And I think that is a mistake. I do not think you can be comparing it to these companies in the way that people are. And that is where the opportunity lies. So what I'm going to do today is I'm going to break down some of the data points that I'm looking at that have helped me construct a trade idea for BIDU that I think is going to pay off really well. So the first thing that we need to think about is, what are people saying when they say this is going to be another Tesla? What they're saying is that we can expect BIDU to move with the same volatility as Tesla. And what we can do is we can actually look at, well, what's the market saying the volatility is going to be here versus, what were they saying it's going to be for maybe Tesla? So first thing we can look at is we look at BIDU on the PA terminal, come to Vol Insights, and we can see that the implied volatility for the 30-day contracts right now is 66%. A little bit higher than what we're forecasting. And that's because we have seen some big moves in recent days, right? We're seeing a 4% move today, for example, right? Outpacing what's implied. If we come down to the vol cone, we can see that the current implied volatility level across the term structure, meaning across the option chain for BIDU, we're seeing a really high implied vol, meaning options are very expensive right now, right? Across the chain. If we're looking at the near dated options, we're seeing, 69% implied vol. We look at the far dated options, right? 120 days out, we're seeing 57% implied vol, right? We're saying this thing's going to move at 3% a day for the next, 6 months, 5 months. And that's a lot of vol to price in for a company of this size, right? If we come here and we look at, BIDU market cap, right? This is a $100 billion company. Dante, what's going on, man? Good to see you. Irving, Tim, Armando, good to see you, man. How's everything going? You have any trades on right now you want to chat about? Bastian, good to see you here as well, man. So let's get back to talking about BIDU here, right? Because I think that you guys are all going to really like this idea and some of the research that went into it. So we're saying that this $100 billion company is going to move with 57% implied vol. Right now, a company of this size, for it to move at this level of volatility, it would have to be something like a Tesla, like a Nikola. But let's talk about what makes these companies so volatile. Is it really just because they're in the EV space? Right now, first of all, Tesla, Nikola, these are EV companies, meaning they are actually in that one industry. Whereas BIDU, one major difference is BIDU is, an e-commerce search conglomerate that is entering the EV space. So it's a piece of its business, not its entire business. So immediately, if you think the EV space is what causes the volatility, well, this should have less volatility than Tesla simply because of its diversification, right? Because it's not just an EV company. Now, what else makes Tesla so volatile? Well, how about the fact that they have Elon Musk at the head of the company, right? They have probably one of the biggest, most famous people in the world running this company. Somebody who, tweets Doge to the moon, and all of a sudden Dogecoin goes up 500%, right? That causes volatility, right? He's, for example, today he bought $1.5 billion of Bitcoin under the Tesla umbrella. So, and you see similar things in Nikola and Neo. Their management teams have very loud personalities. They're out there. They are in the spotlight. And that causes volatility because a lot of what determines how much a company is going to move on a day-to-day basis is, how does the market view the management, right? The management is who is guiding this company. And if the management is seen as risky, well, then the company is going to be pricing in more risk. But what do we see when we look at BIDU? Well, have you heard of any of these guys before? The thing with the BIDU management team is they're actually a lot more quiet. They don't drive the same media and celebrity that somebody like Elon Musk does. So nobody's sitting there watching, Dushen's tweets. Nobody's sitting there watching his tweets. Sorry, Du, if you're, I'm sure you have great ideas, but nobody's watching your tweets, man. So we should obviously see less, where's the risk here? Right? The market, if we come here, we can see they're pricing in huge vol, right? Look at this option chain, right? This vol cone, it shows us how it's changing across time. And we can see it's all elevated, well above, this is basically levels of volatility we've only seen during COVID. Looking at the option volume, we can see that call volume was through the roof at one point. Right, we're seeing 80,000 to 300,000 contracts a day trading on this, and now we're back down to a few thousand here and there on the call side. Right, we got this huge call skew, especially in the short and medium term. And I bet you if we go over to StockTwits, everyone's bullish right now. I'm almost I'd be willing to bet on it. Right, so let's say we go to BIDU. And guys, make sure to ask questions as we go here. I think it's totally worth spending time on this stock. I think there's a good trade here that everyone should at least take a look at. So we can see we had these huge spikes in message volume when the news first came out, right? If we go here, BIDU EV, we're looking at 3 to 4 weeks ago. We come back to StockTwits. We can see that's when we had these big spikes in message volume. If we take a look at the sentiment, 95.5% bullish. Right? We have 50,000 retail watchers here. 50,000 of them. And 95% of them agree with each other that this thing's going to the moon. Well, kind of makes sense that we're seeing this call skew now in the terminal, right? Call skew sort of makes sense. The really high level of implied vol makes sense. Things are adding up here. Always roaming. What's going on? Good to see you on the stream. Right. Well, let's see. What else can we maybe add to this picture here? Well, what we said was one of the things we said was that if you were to compare this to Tesla, what would you expect to see? Right. Sure, they're making this entry into the EV space, but I think it would be reasonable to say that this should have less volatility than Tesla. So what we can do is we come over to our relative value tab here. And what I've done is I've plotted the implied vol 30-day for BIDU and the implied vol 30-day for Tesla. And when I ran it, here's what we see, right? So here is Tesla implied vol over time, right? We can see it's come down. It's sitting at around 57 right now. It was up at 80 just a week ago. And when we plot BIDU on top of it, we can actually see that in recent time, BIDU vol is actually 10 points, 14 points maybe, 14 points higher than Tesla vol. If we look at them as a ratio of one another, it's at all-time highs. Now, does it really make sense that BIDU, the $100 billion diversified company that's entering into the EV space, is trading with a higher implied volatility than Tesla? I don't really think this makes sense. right? So this is a little piece of the puzzle that we can add to our analysis that says, okay, well, people are saying it's going to be a Tesla. Well, it's actually apparently going to be more crazy than a Tesla right now. That's what the market's implying. And what I'm sort of leaning towards is betting that this will sort of come back down, and either, we will see Tesla vol go up to the moon, which, I'm not suggesting a relative value trade here, but I am saying that it doesn't make sense to me that BIDU vol is so much higher than Tesla. What I'm really suggesting here is that we short vol on BIDU. That's the trade that I'm looking at. If we come here, we take a look at the skew analysis for it, just to make sure that the implied vol is driven by this, entry into the EV space. If we come here, we can see that this is the implied vol as it was January 6th, right? At the money, we're looking at 52% implied vol for the 30-day options. Let's take a look at the 90s actually. Right, we're looking at 52% implied vol on the on the 6th of January. News came out. Well, what are we looking at now? You can see the whole surface elevated, right? We went from being down at 52 to up at least 58 for the 90-day options here. And this is a lot of vol. So what we're really betting on happening here is that we're going to come back down below this third quantile line. Right, so we're looking for, on the really far dated options, we're looking for maybe even a 15-point drop in vol. Now, maybe not, a full 15 points. It makes sense that we could see some increase in volatility due to this move into the EV space. So maybe we could see like a 10-point drop in vol on the far dated options here. So maybe what we can do is we can move over to Thinkorswim and see what we can structure out here. See what trade maybe makes sense. So here I am on the option chain for BIDU. And let's say, what should we trade here? Maybe the Aprils. We could trade the Aprils. We could look at the Junes. Let's take a look at the Aprils. And maybe we can trade like the Delta 40 strangle. So let's sell a strangle here with the call at 310, and the put is going to be at 270. 270. Let's have a look at this. So here is the structure that I would be looking to put on. And the reason I chose this structure is, we can see here in the terminal a couple of different things. Number one, we can see that there is, this skew. And I want to be selling some of that skew. So selling at the money, I'm not getting any of that extra juice from the out of the monies being more expensive. So going to go with the strangle over the straddle. And also what I'm betting on here is that the level of implied volatility is going to come down, which means that I want to increase my Vega exposure. Right, so if you look here, you can see Vega. Now, Vega is the Greek for the options. That is your sensitivity to the level of implied volatility. And what I think is implied volatility, the level is going to come down. So I want negative Vega exposure, right? And you can see here that as it currently stands, I would have negative 919 Vegas. So, that's a pretty good return. For every point drop in Vega, I'm going to make $1,000 on this position. And you can also see that I have a lot of theta on this position too. Let's bring this down to one lot. Just make it easier to see. I have a lot of theta on this position too, which is good. So as time moves forward, I'm going to be making a little bit of money. Let's see. So before I jump ahead any further, that's how I structured this, right? I thought about what my view was, right? This is always the way that we need to be thinking about option trading. We need to have an idea. We need to research the idea to the best of our ability, right? You can see I took a look at the news. I've taken a look at the management. I've looked at the forecasts of the future for the stock. I've looked at it through a relative value lens. I'm really trying to paint a picture of what's going on here. And then I have my idea. I think it's expensive. I think the implied vol is too high. I think it's going to come back down, and I know why I think it. The last piece of this puzzle, or the next piece at least, is I need to express that view in the market. I have a very specific idea, and my job now is to express it to the best of my ability in the market. So what I do is I take into consideration what I want exposures to, the risks that I want, and the risks that I don't want. So what you can see is at inception, right? Look at this purple line. I don't care if the stock goes up or down, right? I'm delta neutral more or less at inception. You can see here my delta is $3 compared to a theta and vega of $45 and $90, right? There's basically no delta. And as this position evolves, if the stock starts to move a bit, I would delta hedge it. I would want to maintain that directionless view because I don't know if this thing's going to go up or down. I don't really have a view on it. Now, what we need to do, and you can see here, I traded the far dated options to maximize that vega. Everything sort of makes sense here. So the last thing that I need to do, now that I have my trade, I want to put it on, is I need to ask myself, when am I right? When am I wrong? And what happens in those situations? Something that tends to scare people is that when you're trading a strangle like this, you have this unlimited risk exposure, right? If the stock were to go to 50 bucks on a one lot, you're down 17 grand, right? If the stock were to go up to 500, you're down a lot as well. But we have this range of protection here. Chris is asking, can you talk about sizing a trade like this? 100%. And that's going to come down to, that's actually going to be right after this part, right? Because what we need to say is like, well, what's our risk on a one lot, right? How much do we stand to make here? How much do we stand to lose here? So let's come back to the terminal and let's see what vols have gone to. So we can see that the highest volatility has been for these far dated options is about 65, right? Or about 8 points higher than what we're seeing right now. So it's probably fair to say that if we are wrong, one thing that we could see is vols increase another 10 points, right? If vols were to go up another 8 points, 10 points, I'd probably be like, okay, look, I'm probably on the wrong side of this thing. Another way in which case I might be wrong is if realized vol picks up, right? If the stock starts to move, maybe we see the stock trends up 15%. Well, what does my position look like then? And on the flip side, what does it look like if I'm right? Right? What is my risk to reward on a trade like this? Because, in the end of the day, mistake a lot of people make is they would throw something like this on and they might end up bag holding it all the way till it goes to, $400. Right? They might end up bag holding it like that. And that's, that's a mistake. Right? Just because, as you guys can see, this is a pretty good trade. It's a good idea. Good ideas lose all the time. Right? Just because it's a good idea doesn't mean you need to bag hold it until $0, until you get a margin call. You still have to know when you're beat. So what we're going to do now is we're going to go and do what's called stressing the position. We're going to come in here and we're going to adjust this position to see what our trade looks like under different circumstances. So, Ned, what's going on, man? PA roll call. So let's say vol goes up 10 points, right? A 10% increase in volatility. Well, let's see here. Oh, Drake, I didn't know you were lurking in here too, man. What's going on? Let's move up the date a bit too. Let's say we hold it till, towards the end of Feb. And let's see, what's the vol at here? Okay, we might need to bump the vol up a tiny bit more here. Let's move the date. I'll hold it for 10 days. Vols would go up. Okay, about 10 points. So here is what our position would look like if vols were to go up 10 points in the next 10 days. Well, if the stock didn't move, we would be down about $400 per lot. But, it's unlikely that the stock's gonna, pin to the exact strike we have right now. So, and we're trying to paint a picture of worst case scenario here. So one thing to keep in mind is let's look at how much the stock has moved in recent time. Well, it's rallied like crazy, right? This thing has gone up a lot in the last, little while. Maybe, it's gone up like 30%. So what would happen if we were to see another 20 or 30% move here, right? So let's say it moved $80, $90. It's trading at 275 right now. So let's say it went down to 200. Where do we stand? Okay. If the stock went to 200 and vols went up 10 points, we would see a loss of about $3,000 per position. Okay, per position. Now, on the flip side, let's say it were to go up to 360, I guess, we'd see a loss of about $3,500. So it's probably fair to say that our max risk on this trade is around $3,500. Remember, BIDU is a pretty big company, right? It's a $100 billion market cap. And, so I don't have too much fear about something like what happened to GameStop happening to BIDU, because it takes a lot of money to push a company this big, right? It takes a lot. So not too concerned about that. But, so how would I put this? I'm not concerned about it moving 200% in the next week. I don't think that's going to happen, right? But if you wanted to see what your loss would be if it were to, let's say, double in price, well, your loss would be about 15 grand, right? If it were like worst case scenario we could imagine, loss of about $15,000, which is hefty, right? But I don't think it's realistic, because if you're bag holding it all the way to $50 or to $500, that's bad trading, right? What, the stock moved 30% today and you're still holding it? We're short vol here, guys. We need to cut our losers quick, right? We need to hold them until we realize our expected value, or we're wrong. So this is what it would look like if we were wrong, right? Max risk of about $3,500. Well, what if we were right? Well, the way we would do this is we'd basically flip it around, right? So we're going 10 days in the future still, right? February 18th, you can see that down here. And now what we're going to do is we're going to drop vols by what we think is reasonable. So we're going to come here, looking at these far dated options. Let's see what happens if we drop vols by, let's say, 12 points. Right? You can see we make about $1,500, right? And if we were to get the full, 16, 17 point drop, we make tons of money. We're up $2,000. So a little bit less than a 1-to-1 risk reward, but, and a lot of people will look at that and say, Sean, this is a bad trade idea. I'm risking 2 and I'm only going to make 1. And sure, you can look at it like that. But if all you care about is risk reward, go play the lottery. You're going to risk 1 to make 100 million. Obviously, there's more to the picture than just risk reward. And that's your probability of being right. That's why we did research. You can see here our break evens are at $338 and $231. The stock's trading at $275 right now. I think we've made a pretty good justification for why the stock won't move too much. And, I think this is a trade that we can manage with some confidence. There's no real, I don't think there's too much takeover risk for BIDU. I don't think there's much bankruptcy risk here right now. So, it's not likely we're going to get a 50% move or anything. So that would be my trade recommendation for the week. I think it's totally worth spending some more time looking into it, doing a little more research into what they actually plan to do in the EV space would be useful. Seeing how much money they're allocating towards it, what their forecasts for it are. How serious are they about this? Are they using partnerships? All of these types of things are definitely worth exploring before putting this on. And for the PA guys here, we'll continue this conversation in our Discord. But do you guys have any questions for me about this trade? This analysis went on a little bit longer than I originally anticipated. I had a couple other ideas that I wanted to chat about, but we're just going to save those for tomorrow's stream, right? Thing to always remember is we are in the heat of earnings season right now. Lots of trades to look at on that front. I'm pretty sure tomorrow is a huge day for earnings. I think we have like Lyft. I think Twitter has earnings. There's a lot of companies coming out right now with earnings, and it always makes for a fun conversation to look at. So that'll be focused for tomorrow. Now, key thing to note, guys, if you are new to this stream, I have a special offer just for those of you that stick around to the end of these streams. In the next few weeks, I'm going to be doing a free trial of the Predicting Alpha terminal, and I'm offering it first and foremost to those of you on this stream. I'm only going to be doing about 50 of them, and for those of you that are sticking around getting this analysis, I want you to be able to have it firsthand. So all you need to do to enter for this free trial, right, is send me an email and just request to be on it. So I'm typing my email into the chat here. You just send me an email with that, and once the free trial is ready to go, I will be sending you a link. You just sign up there. If you cancel within the first week, you don't get billed. You'll have full access to everything. You can book a call with me and my business partner, Jordan. You'll have access to our community, our education, and obviously, most importantly, our data terminal, right? This is really to show the importance of putting numbers behind our ideas, right? If you watch back on the stream, if you tuned in a little late, it's no problem. These are all recorded and posted. Really take a look at the analysis that we put in here and how having this type of information available paints a totally different picture than anything you could ever get from looking at a chart or even just looking at the fundamentals. It's a completely different approach to trading. And I think it'll open your eyes to what's really possible when you have all the information available to you, right? This is the reason why, big Wall Street firms have continually crushed the small guy. It's not because they have more money. It's actually because they have more information and know what to do with it. So if you enjoyed this stream, guys, really all I want is a little like and a little subscribe, and I will see you on tomorrow's stream. Have a good day, everyone. We'll talk soon.